What's going on, EGA Tribe? Welcome back to another EGA Breakdown with the Daily Brief here on the EGA channel, where we plan to trade and trade the plan. I hope you guys are having a great week. Just wanted to come on here to do a quick daily brief for you guys and continue on with this little series that we've been putting on. Sorry for the little bits of inconsistencies. I've been kind of a little busy and getting on track with my final quarter in my master's program. I will be done in September, and that is going to free up a lot of my time and bandwidth to contribute a lot more time to the EGA channel. So I hope that you guys continue to support me through this time, as I will be a little inconsistent through my last quarter. It is going to be a very stressful quarter for me, but I am going to make sure that I try to be as consistent as possible with you guys and post videos as soon as I can. All right. So just kind of, if you can help me out by liking and subscribing, that would be truly appreciated. I love doing these videos for you as much as you love them. So your likes mean a lot to me. Make sure that you just smash the like button every time you come here, and that's all that I ask for these videos. So yesterday we had a rather not really a shocking market drop, but we had pretty nominal correction on the market. We had about a 1.6% correction on the S&P 500, almost 2% by the weeks, and I think will be probably what we will see by the end of this week. And this is a pretty nominal pullback from the uptrend. Now there are a couple of things that are going on here, and let me just share my display real quick so that you guys can see what I'm talking about. I'm going to go into what has caused this first of all, and we have already signaled this a couple of weeks back to our Discord community. So if you're part of our Discord community, you would have seen this already kind of popping up on our playbook. And it was something that we didn't really take that seriously, but it ended up being something that the bond market was sniffing out. And we caught it, but we didn't catch it in time, which sometimes happens. The whole of last week, I didn't really feel very in line with the markets, but right now I do feel much more better in line with everything. The reasons why things happen sometimes are so much more important than being there first and knowing it first. Sometimes the post-mortem is as important as doing the research to figure out what's happening next, because then you can figure out what is the next move after there. So let me kind of give you guys the breakdown on what has happened, okay? So if we look at the bond market ever since we saw the movements in, I want to say, early June, right? We have seen a bottoming out and then a quick buy up and succession. Now, on the start of July, we had actually already mentioned that bond markets are signaling more of a deflationary pressure here growing among investors as technological shifts are adopted worldwide. And since technology is deflationary, the increase in price of bonds and lower yields would affect companies that are levered disproportionately, especially those that have yet to pivot their structure towards a more technology intensive structure. And we knew that small caps would more than likely be the culprit here in causing this market run, right? And ever since then, of course, we've had a huge move down in IWM, which is the small to mid cap ETF, right? The Russell 2000. If you look at this thing, ever since June, it has started to go, try to test a double top here, and then it started to reverse to the downside. And now we're seeing actually inflows come back into this this sector, but more on that later. Okay, so there are a couple of things that I want to explain here. First of all, the first thing that happened here was the bond market was pricing in pretty much the sensitivity of long-term interest rates, right? So basically, what they were pricing in here is the fact that the Delta variant is going to cause more havoc and reopening will be delayed. Okay, what is the implication of that? That implication means that interest rates will not be raised as quickly as the Fed was projecting. Right? So I know the Fed said, oh, we're going to do it in 2023. The thing is now the bond market's starting to price in the fact that it might not happen in 2023 and might happen in 2024, right? That's what the bond market is saying. They're like, okay, we know you said that, but this thing, the reopening is not happening as quickly as we projected because there is a new variant going around, and we think that this is going to continue to cause havoc. And so investors started to buy bonds, okay? Why? Because when interest rates goes up, right? When interest rates go up, then what happens to bonds, long-term bonds, in fact, see a lower yield. So that's one of the reasons why the market was initially selling off. Bonds were initially selling off like crazy because we were thinking about, oh, reopening, and then boom, something changed here. And right at this point here, right, when we started to break out here, this is when sometime in June, you realize when IWM started to fall, right, the same time in June is when everything started to come down for the bond, for IWM, and at the same time, bond investors started to buy bonds like crazy, right? They started to pick up the far dated bonds, and as well as anything above the 10-year bond, right? TLT and TLH both saw very big inflows. Look at TLH, right? The 10 to 20-year bond. This also saw huge inflows, right? So why does that happen? Because now these bonds are more attractive to buy, right? If interest rates go up, then the yield of these bonds start to come down, right? Because let's say interest rates change by, I don't know, 1%. That means that the sensitivity of these bonds, which longer term bonds have a lower interest, a higher interest rate, their interest rates would be affected, right? Because so they have a higher sensitivity to interest rates, okay? And the greater duration, basically, it doesn't give a big enough deal for bondholders to hold until maturity. So why would they initially? And now they actually have a reason to hold because the rates might be, delayed for a while. So the coupon payments will be, better, right? Okay, so that's one thing. The other thing is, right, people were selling small caps because small caps were the ones that were, bound to be hit the hardest, right, by the Delta variant. So there were a couple of things going on, all right? So the bond market kind of sniffed this out early. Now, we saw this happening, but I couldn't make heads or tails around it because I was trying to understand why bonds were being bought up. And usually when bonds are being bought up, this is a risk-off measure, right? When we see bonds rallying, that means equities are about to come down. At the same time, we did see a spike in the dollar index, right? Which, kind of shows us right now. And in fact, if we break above 93, 176 here, it's going to be a pretty big thing for the dollar index, right? Because then the dollar is going to start rallying, and that pulls equities further down even further because you're buying equities in US dollar. And if the cost of the dollar goes up, it becomes less attractive for investors to hold US denominated debt or vehicles, right? So this is no good. We don't want to see the dollar actually strengthen here. We want to see it weaken if you want the market to rally. But remember, we're here now. We can't really, talk about what we want and what we don't want. What's important is that we start to think about what's about to go down next, right? So right now, I do see inflows coming into Russell 2000. I'm seeing small caps being favored over large caps. Now, if you were listening to the daily brief from last week and also the second half update, which I put out for the second half of the year, which was a 20-something minute video, I mentioned that investors have been pivoting out of value stocks and have been putting their money into other pockets of the market. Value stocks have been the hottest thing that people bought in the past few months. And as you can see, stocks like Apple, Microsoft, and all the bigger companies that were value-driven saw record inflows in the past 1 to 2 months. And obviously, right when retail traders start to get a whiff of this and they start getting into the markets, that's exactly when the rug pull happens because why not, right? So I have been talking about how the market has been slightly overheated and, that you should start hedging and stuff like that. If you have been holding hedges and you have been, pretty much managing your risk on your portfolio, you should be doing completely fine here, right? You should be doing completely fine. As far as, everything else goes, we see continued possibility for a strong buy up. So let's go through the technicals here on SPY and QQQ to kind of go through what's going on. But I'm going to try and break it down as quickly as I can. Okay, so just to keep it simple and non-draggy, okay, here's what you need to know for today. If we can close above 428, or 430, this is a good sign today, all right? If we can close above these two levels, it's a good sign. This is the key pivot to hold. We need to hold 422. If we break 422, then we're going further down into the 418 to 420. And if we break that, we're going down into 412 to 414, all right? If we hold above 428 or 430, these are two very good signs that we will pivot to the upside, all right? We did have very sexy legs on these candles here. A pin bar followed by kind of a bullish candle, right? And if you look at on this side, if I pull my screen down here, you'll see a little slightly different chart, right? On the 4 hour here with the S&P 500. you'll see that it was a very bullish engulfing candle on the bottom here, very bullish engulfing candle on the Dow, and a very bullish engulfing candle on the Nasdaq. All three of them had very strong reversal candles. However, remember, that doesn't say much, right? From a technical perspective, this could still be a dead cat bounce and then extend further. This could still be a dead cat bounce and extend further, okay? And dead cat bounce, extend further. That could definitely happen, all right? So we don't know what's going to happen in terms of price action for sure. But what we can know is we will go by key pivot points, right? There's a gap to be filled over here at 430. It will be nice if we can get up there. And that will be the way that I will know that I should enter back into bullish positions. For now, I've been sitting cash for a while. So I've been holding a bunch of cash. I will deploy when I see the time is right? Okay. So that's what you need to know about SPY, all right? With QQQ, if you've been watching the daily brief, I did mention the 61.8. We already hit it. This was a perfect reversal right here, double top, and then we got a reversal here. Came back perfectly at 352, bounced yesterday. This is a perfect setup here. And now, if we really go for a deep correction here, we could get a dead cat bounce and then extend into the 50 as a bounce here. 61.8 obviously will be the first bounce at 346. This is if things get nasty. What we really want to do though is hold this level today, okay? For QQQ, we just really need to hold 352 today. This is a main key level today, right? If we break 352 today, things get nasty, we go down to 346. If things break 346, then we go down to 340. And I think that this is going to be a very strong support level for QQQ, okay? So these are the levels. Now, if we hold 352 and we can consolidate here for a bit, I say that I think what's going to happen is we will more than likely reverse. However, I don't think that's going to happen. I think that what's going to happen is we may get a longer extension to the downside and then start consolidating sideways for a while before kind of moving into this channel, and then after that move back into the upside, okay? Now, obviously, this is complete speculation. It's definitely not going to happen the way that I'm saying it's going to happen. But, you know, just based on my experience, what I have been seeing in the markets for a long time, usually when we get a wave like that, it's never just one wave down, right? We always see a bounce and then a second wave down, a bounce and then maybe a third wave down, and then sideways consolidation, and then the rally, right? That's what usually happens, okay? Obviously, this is I'm comparing March drop here, but you know, I'm not saying that this is exactly going to happen the same way. But even look at even the May drop that happened, right? When a drop like this happens, what happens? You usually get a first wave down, and then a pullback, and then a second wave down, and then a pullback, and then sideways consolidation, and then the rally, right? So we never get like just immediate buy-ups. It's pretty rare, but if that happens, you know what? Well and good, okay? If we get a strong defense here, and then we reverse to the upside, I'm not complaining. I still have bullish positions. I'm okay with that, okay? So either way, it's a win-win situation. Just be on the lookout for what happens. Remember, the easy rejection point for QQQ will be the 360 level. 360 is going to be the key level for rejection. So if we get a rally up today, remember that be extremely cautious not to buy into the rally and say, oh, it's a bull rally. Be very, very careful because a rug pull can come again. All right? Great. So that's your updates on QQQ and SPY. Next, I'm going to just go over the VIX and I'm going to end the video. I don't want to do any ticker breakdowns today because we've gone over the time limit already. I want to keep these videos as short as possible for you guys. So the VIX, Wix-wise, we had a quick little buy up into the 21 region yesterday. Went up all the way up to almost 25 yesterday. This was a pretty exuberant buy up. And then we had a pretty big crash. Now, a good sign will be for VIX to come back down below $18. That's what I would be looking for. We can close below $18. That would be nice. That would be a nice volatility crush. And then that would signal for institutions to start buying stocks again. Now, until we don't get there, we're going to unfortunately see elevated levels of volatility within the market. And that's usually a good thing, okay? Now, one of the reasons why this happens is because when VIX is high, this means that options contracts, out-the-money options contracts, are more expensive, right? And in general, just implied volatility of the options chain is higher. And what happens in this case is institutions don't usually make bigger bets until they crush volatility. So once the VIX starts getting crushed, then they start entering long positions to take to the upside, okay? So we want to really wait for that VIX crush, and then I'll be watching for that before I make any moves to the upside, all right? Great, so that's kind of like your breakdown for today. I hope that helps you out. If this video has helped you out, please make sure that you smash the like button, guys. I really, truly appreciate it if you do. You know, I would really love, like, if we could get to like 100 likes. Like, I'm gonna pose you guys a challenge. Like, if you can do 100 likes on this video, I will love you long time. Also, let's just do the conclusion real quick, and let's call it a day here. So, once again, combination of different things are the cause of this little correction here, right? Also, market was kind of overheated. So don't be overly bullish and don't be overly bearish. This is a good time to sit on your hands and deploy money when you see fit. If you're a sort of person who has already overcommitted on options that were short expiries, this is exactly the reason why I say don't go listening to nonsense people and doing bullshit things where you know, take unnecessary risk and play risky options in the short run and then get yourself burnt. If you are a person who did that, this should be a learning lesson for you. Take the loss and move on, right? If you're a person who's holding on to longer term options, you should have no fear because your theta drain is not going to be that bad on your options and you still have a lot of time to ride out, right? These corrective waves usually last like, you know, a couple weeks. It's not going to make you completely dead, okay? For those of you that have contracts a month out, you shouldn't be thinking about, oh no, am I going to cut? You still have 2 weeks to decide, okay? Before theta really starts to kick in. So be patient. Manage your psychology at this point. This is really a time to manage your psychology, okay? And I was telling the group yesterday, really gotta, in these moments is the moments when your resolve is tested as a trader. You could be, I don't know, you could be in the market for like a year, something like this comes around, and this is the reason why you lose all your money, because you keep betting on the upside or you keep betting on the downside. This is a good time to do nothing, okay? Know when you're ahead in the market and learn to stay ahead. Don't take on unnecessary risk for absolutely no reason. You want to really, really maintain your positions here. And if necessary, if we do pivot to downside further, then we start to hedge again, right? Right now, I've already closed out all my hedges, right? And if the market closes below a pivot point, I'll hedge again, right? But for right now, I don't need to take any trades. I don't need to do anything. I'm sitting cash. I'm sitting pretty. When the time comes, I'll be investing in a whole bunch of stocks again. And that's the name of the game. Rinse and repeat. So I hope this video helped you out. Have a great day, guys, and I'll see you all again tomorrow. Bye.